I thank the ranking member for yielding. And before entering into the debate, I certainly want to acknowledge, as I have before, throughout this debate, number one, the work of the subcommittee chairman, with whom I'm proud to serve as the ranking member. It's been a very open process, a very good debate. And I certainly want to congratulate the gentlelady from New York, who I know has been quite passionate about this issue. And although we certainly disagree with the implications of her legislation, what I believe, or I hope to believe, are unintended consequences, I certainly share at least a number of the goals that she has. However, I do have great concerns about this legislation. First, if this was a debate on whether or not there are credit card companies in America that use misleading and deceptive practices, I think we could pass that legislation with unanimous consent. And Mr. Chairman, if this was legislation about whether or not the average consumer can understand their credit card agreement, the average one running 6,691 words, and would take the average American almost an hour to read, much less comprehend, my guess is we could pass that with unanimous consent as well, since indeed most Americans cannot understand the provisions in their credit card agreements. But unfortunately, the legislation before us goes way beyond simply ending deceptive practices. It goes way beyond simply trying to effectuate effective disclosure for the consumer. And although the bill is entitled the Credit Card Bill of Rights, I have great fears, Mr. Chairman, that ultimately this will prove to be the Credit Card Bill of Wrongs. I believe that ultimately three things will happen if this legislation is passed. Number one, because of its prescriptive way in dealing with risk-based pricing, by essentially imposing a form of price controls on late fees, either number one, the borrowers who do it right, and Mr. Chairman, that's half of America. Half of America either pays their bill off in full at the end of the month or does it almost every month. And then there's about a quarter who miss some, and then there's about a quarter who are almost universally late. But what's going to happen, Mr. Chairman, is the people who are doing it right, who are working hard, trying to pay their bills, are going to be forced to bail out those who don't. This bill will take us back to a previous era, a bygone era where everybody paid higher interest rates, where a third fewer people had access to credit, and we had all of these dreaded annual card fees. Now, that was a previous era before we had this thing called risk-based pricing, Mr. Chairman. And what is that? It says, you know what? If you have a checkered credit past, or maybe you have a lower income, maybe you're having trouble meeting your bills. Well, credit-based pricing says, you know what? You can still get access to credit if you're willing to pay more for the risk of the creditor. The option, of course, is not to have any credit at all. In which case, if you lose your credit card, then you're looking at some other option. And in that respect, there are provisions of this bill that maybe ought to be called the Pawn Shop Owners and Payday Advance Lenders Relief Act. Because, Mr. Chairman, if you start to take away credit opportunities of those who have checkered credit past, those who are low income, they may be forced into options they don't like. Now, again, I want to make it very clear. I think the payday lenders, the pawn shop operators, they serve a very vital function in our economy. Many people use them. That's not my point. My point is the consumer ought to be able to choose. So if you start taking that ability away to risk-based price, you're taking away credit, number one. Number two, you're going to be forced back to this bygone era where the people who did it right have to bail out the people who did it wrong. I mean, Does that sound like a fairly consistent theme out of this particular Congress? Bailout, bailout, bailout? And that's what this is, Mr. Chairman. Unfortunately, it will force the good credit card holders to bail out those who aren't. And you know what, Mr. Chairman? We've now seen out of this Democratic Congress a $700 billion bailout bill costing the average American family over $6,034. We've seen a $1.13 trillion with a T, government stimulus plan costing the average American household $9,810. We've now seen out of this Democratic Congress, Mr. Chairman, an omnibus spending bill, $410 billion, costing the average American family $3,534. And now just today, a $3.6 trillion budget, going to triple the national debt in 10 years. I mean, Mr. Chairman, isn't it enough that this Congress has taken all the cash out of our wallets? Is it going to take the credit cards out of our wallet as well? I hope not. I don't believe that's the intent of the legislation. But I fear that will be the effect. Now, again, there are many problems in this credit card market. There are credit card companies, one in particular, that my wife and I absolutely refuse to do business with because we don't like their practices. But throughout this debate, and I challenge members on the other side of the aisle to show to me, where is it that we don't have a competitive market? Where is it that the consumer doesn't have the choice? Now, up until the recent economic turmoil that we've had, I believe there are over 14,000 different credit card issuers in this nation with a dizzying array of options for consumers to choose from. It's the competitive market that is the consumer's best friend. Now, if people don't understand their disclosures, and I believe, again, that many of them don't, what we ought to do is not take away the economic opportunities, not take away consumer choice, but ensure that there is effective disclosure written in English, not voluminous disclosure written in legalese. Part of this is the fault of Congress and the regulators. When you disclose everything, you end up disclosing nothing. Part of it is an answer to an explosion of liability exposure to where some of these credit card companies feel, well, if we don't disclose this, we may get sued. And then last but not least, again, there are misleading and deceptive practices of credit card companies that should be stopped, and particularly under the Truth in Lending Act, under Deceptive Trade Practices Act. Sometimes, Mr. Chairman, the answer is to enforce the laws that we have on the books. Now, I don't see the gentlelady from New York on the floor at the moment, but I want to commend her for that portion of her legislation that deals with disclosure. Now, it roughly parallels that of the Fed regs that the ranking member spoke of. And I think a lot of good can be done here in informing consumers about what their rights and responsibilities are. But again, ultimately, I feel that if we enact this legislation, bad things are going to happen, and it's not just a theory that I have. It's not just me personally. I mean, let's listen to our own Congressional Research Service. They said, quote, credit card issuers could respond in a variety of ways, speaking of the legislation. They may, quote, increase loan rates across the board on all borrowers, making it more expensive for both good and delinquent borrowers to use revolving credit. Issuers may also increase minimum monthly payments, reduce credit limits, or reduce the number of credit cards issued to people with impaired credit. So it's not my opinion. That's the opinion of the Congressional Research Service. Now, I'm sure that every member here has a number of financial institutions throughout their congressional district. I'm proud to represent a number of community banks in the 5th District of Texas. It's an informal poll, but I went to 3 of them. First State Bank in Athens, Texas, East Texas National Bank in Palestine, First State Bank in Mesquite, Texas, and I asked them, what's going to happen if this legislation is passed? And what they told me was, you know, at that point, the cost of these cards to community banks just becomes so much to justify continuing the program, and the card portfolio ends up getting sold to the big banks, and the consumers lose their options in smaller markets. That's what we're hearing from community bankers. What do we hear from academics? Well, we heard testimony from Professor of Law Todd Zawicki at George Mason University, quote, "Increased use of credit cards has been a substitution from other types of consumer credit. If these individuals are unable to get access to credit cards, experience and empirical evidence indicates they will turn elsewhere for credit, such as pawn shops, payday lenders, rent-to-own, or even loan sharks." And indeed, Mr. Chairman, we see this happening in the marketplace now. Pick up the newspaper. Recently in the India Star, I read, quote, "More middle-class families are seeking payday loans as financial turmoil mounts." The Boston Globe, "Tight credit drives consumers towards pawn shops." As you begin to take away people's credit cards, you send them elsewhere. And perhaps the most relevant piece of data, Mr. Chairman, is what happened in the UK, in Great Britain, when they passed a similar law. They decided credit card default fees were too high, and they ordered the credit card issuers to cut them or face legal action. What happened? You can look at the record. 2 of the 3 largest issuers promptly imposed annual fees on their cardholders. 19 of the largest raised interest rates. And by one independent estimate, 60% of new applicants were rejected. Those are what I assume to be the unintended consequences of this legislation. So, Mr. Chairman, as people shoot at credit card companies, and there's a number of them that need to be shot at, I hope they don't end up wounding hardworking, struggling American families who rely on these credit cards to finance their small businesses, to help them with their health care needs, to buy groceries. And I know people can go and high-five each other and say, look, we beat up on the credit card companies today. But if you take away risk-based pricing, you're going to take credit opportunities away from the people who need it most. And if you impose this bill, what you're going to say is to half of America who pays their bill on time, well, folks, you're going to have to bail out somebody again. You know, we're reaching for your wallet. We're going to force you to bail out the people who don't do it right. That's not right, Mr. Chairman. It is not fair. And because of that, this legislation in its current form needs to be defeated. We need disclosure. People need an adequate amount of time to pay off their balances if their interest rates or terms change. But we cannot restrict in a competitive marketplace the options and opportunities of struggling Americans at a time of a great credit crunch when they desperately need access to those credit cards today. So I urge defeat of this legislation, and I yield back my time.
Gentleman from Texas yields back his